Five, four, three, two, one. Liftoff.
What's going on, family and friends? I was invited by the XTC community to speak during their recent X Space. I took advantage of this opportunity to ask Link2's Chief Strategy Officer and board member, Karim Noorani, aka my former employer, some pointed questions. I asked him questions about Link2's business model and its relationship to SPVs, or special purpose vehicles, and how they're transforming the private equity landscape. I asked him questions about tokenization, the IPO landscape or IPO window, specifically in relation to the AI companies available on their platform. I hope you enjoy.
Read a recent survey conducted by the Corporation Service Company, or CSC. They surveyed more than 400 C-suite executives across the private capital markets. And of that, 25% said that they see that deal making is going to improve in the next 12 months or less. And of those 400 individuals they surveyed, or those C-suite executives, 76% believe that the market conditions will improve in the next 5 years. However, that the market will be bolstered with the use of SPVs, special purpose vehicles, that they're going to become more prominent. Can you talk about the utility of SPVs for private equities market in relation to Link2's business model?
Oh, Ray, this is a question that is really interesting, because if you look at what's happening now, when we started Link2 and created this marketplace, there was very little activity that was going on. And it's been 4 years, and we've seen a tremendous amount of people starting to play in the market. And, we're not really concerned about that, because it is what it is. Competition is good. What we've also seen, and if you haven't paid attention to this, the amount of monies, billions and billions of dollars, are being raised by venture capital companies and large private equity companies that have traditionally not played part in the secondary market. They've made investments in primary rounds, so earlier on in the journey of these private companies, and they've seen them through exit. Now, as you know, most of those exits today, the average lifespan before an exit is, over 10 years, close to 15 years. Companies are staying private longer. And a lot of money, there exists a lot of dry powder who are saying, well, I'd prefer not to wait 15 years for an exit. And they're buying later stage companies like we do. I mean, we don't buy companies that are under $1 billion valuation, except a few that we see a lot of promise around. And a lot of money is now starting to chase secondaries with large dollar amounts looking for an earlier exit. Now, obviously, 24 started off well with a few IPO companies that sort of tapered off a little bit, given that the price hasn't sort of maintained after an IPO number. And that sort of created a little bit of a hesitancy in the market. But I think that'll continue to improve in 25 and perhaps going to 26, where after the compression in the public markets over the last couple of years, that we were starting to buy companies at a reasonable valuation. And then hopefully the exit price will hold on as they become a public company. So I see a lot of activity in this environment with competitive pricing.
Awesome. Thanks for that, Karim. I really appreciate it. I've got another question in regards to tokenization. The U.S. Treasury market is massive. We all know this, and it's an essential component of the global financial system. It's the biggest and deepest, the largest bond market on the planet. I believe, from following BlackRock's initial announcement of their tokenized money market fund, BIDL, in just a few months ago, they've already tokenized more than $1 billion in short-term treasuries across multiple blockchains, including Ethereum, Polygon, Solana, and many others. And remember, that's just in 3 months alone. This market is potentially $26 trillion. And BlackRock strategically partnered with BNY Melon as the custodian, which is the largest custodian in the world. And BNY Melon is also the custodian for Circle's treasuries, backing up its stablecoin USDC. In addition to BNY Mellon, a former BNY Mellon representative sits on the board for PolySign. So I just want to know your thoughts about these relationships, and what is it about BNY Mellon that companies seek to have their assets custodied with them?
Did I say to the rest of you that Ray knows a lot? Look at him, he's asking difficult questions here, Ray. So Circle, we've been buying Circle shares for over a year now, almost a year and a half. Once they released the opportunity for their shares to be sold, we started buying Circle. So we are a believer that there has to be a creation of an infrastructure that levels the playing field, that allows people a certain amount of confidence. USDC, and then you've got BlackRock, and obviously you've got BNY Melon, who are stable giants in the environment, allowing this infrastructure to operate. Now, the contention obviously becomes, are we heading towards a centralized, decentralized environment, or will we always have to be centralized to allow a decentralized operation? So, there's always going to be a conflict there, but there sort of has to be some sort of environment or playground rules that allow this happen. So I do see flexibility, especially when you've seen the Bitcoin stuff happening and the ETH stuff happening in the environment. I do see a certain amount of flexibility, but because you're challenging authority with the decentralization aspect, it will not come without pain. So I do see progress, but I see pain along the way as well.
Thanks, Karim. I appreciate you answering that question, sir. I got one more, last one, and I appreciate you guys. On the topic of AI, Karim, because I know that you guys have a plethora of portfolio companies on the platform. The AI market is obviously dominated by NVIDIA, which was discussed earlier. Governments across the globe are reportedly pouring huge amounts of money into AI infrastructure as we speak. Spending on AI chips is expected to grow more than tenfold over the next decade, generating hundreds of billions of dollars in revenue. What do you envision for the IPO landscape in regards to linked to portfolio companies like Cerebras, Light Matter, which I noticed is sold out on your platform, and some others? I know you can't speak into detail about individual companies, but what do you think the IPO landscape may look like? Should it open up later this year or next? What would that make for these AI companies?
Ray, that is a good question and a difficult one to answer. Obviously, we don't know. I mean, I know as much as all of you who are doing your individual research. I don't know what the horizon looks like. I don't know when they'll IPO. I don't know how long they'll stay private, or even if they'll become a public company or be acquired by another company. The AI environment has progressed so quickly, so fast, that there are a couple of different things. A lot of early stage startups will be bought, and that market will continue to consolidate unless you're a leader in a particular aspect of AI. If you're a leader in a particular aspect of AI, then the opportunity for you to become a larger company through an IPO, and that's not the only exit. I mean, you can be acquired, which is also an exit. I think the indications that everyone needs to pay attention to is what's being said by the company or what's not being said by the company, because we know that companies are either going to spread a lot of news prior to making big announcements so that everyone knows what they're doing and who they are, or they're not going to say anything because they still work on stealth. So are they developing a new technology that they don't want anyone else to hear about? Possibly. Are they a failing company and don't actually want to be in the limelight? Let's take a look at an example. We were investigating quite heavily buying a company called, I'm sorry, I forget the name, but the company hyped themselves. They were ex-technology people, put the company, raised $700 million, valued themselves at $1.2 billion. And we said, okay, this sort of started to meet our target. And we started paying attention to the company and noticed that there was infrastructure issues with the background of the technology and the founders. And we said, we're going to stay away from this. So pay attention to who the founders are, what the technology is, what markets they're addressing. And that, as you pay attention to that, and I'm asking you people to do work because, we do the work, you need to do work before you make the investment, is when you pay attention to these details, you'll start to see a pattern. And if you look at the pattern and if you look at what happens for that company, it's likely to head in the direction that you think it's going to head, either a spectacular failure or a success.
Karim, thanks for stepping in the box and swinging away on. I appreciate you, sir. Thank you.
I hope you found this episode insightful. If you want to learn more about Link2, see my link in the description below. It also comes with a $500 savings off your first investment. I appreciate you all tuning in today. I hope you have a great weekend. Love you mucho.